Hey guys, today I'm going to be talking about a couple trades I took. One of them was on gold and the other was on USDCAD. So starting off with gold, what I noticed was we had liquidity here. We had relatively equal lows on the smaller time frame. And then, we were also trending down, but we got a schematic right below this liquidity, which told me that we were going to go long, at least in the short term. Matter of fact, I took it long to right about here, or attempted to on my first schematic. It didn't play out completely like that, but there was a smaller time frame schematic that I did take an even greater counter trend move on. So what I meant to say with this was that on the schematic that I have down here, okay, so I was targeting this imbalance up here from this, right? So my first TP was here, which is why I have this marked off, but then I let some of my position run. Sadly, it did not hit and it kind of just came back down to break even, but I secured partials and so I locked in profit and then I was risk free on the trade. It's a bit unfortunate that it came a few dollars away, but it is what it is. And there's nothing that I can really do about that. But I'm going to get rid of this and show you guys why I took that trade. So if we look, this is the schematic that I was talking about when I referred to the equal lows being swept. So the equal lows were right around this region. And then what did we do? We generated some liquidity in the form of, preliminary support, selling climax, a secondary test is liquidity, a secondary test in B is also liquidity, and then the spring is what takes the liquidity. So our spring occurred here, and the labeling of this isn't important. We'll go much deeper into that with our course. We're going to show you how we label them, what we look for, what we don't look for, because we do not trade schematics in a conventional manner, to say the least. I think that we have a unique way of looking at them because we don't look at, every single component. We don't break it down to the core of looking at signs of strength and weaknesses. We look at really the generation or the engineering of liquidity and then that liquidity being taken, because that is the biggest part of schematics. It's just more liquidity in the markets to be swept by the banks so they can bring price higher or lower. So in this case, we had our preliminary support, selling climax, secondary test, our secondary test in B, and then our spring. This is a spring because it broke this structure here. So after we had this, now I was looking for a test of this spring. And the test of this spring is obviously going to happen on the lower time frames, right? So if I go to the lower time frames, I need to go back much farther. So if I go to the lower time frames, what did we do when we came back to this spring? So here's our spring. Really, you could say it's this movement here. And when we get back to it, what do? We accumulate yet again, right? So we get our preliminary support, we get a selling climax, we get a secondary test B, and then our spring, right? So as you can, note by looking at this picture, these look relatively similar. And this isn't always the case, but this is just a beautiful example of mitigating a higher time frame spring with a lower time frame schematic, and then continuing in the general direction. We continue in the general direction of this schematic with this large movement, and this large movement was produced by this schematic here. And then what we have is a test of the spring here. So if I mark that off, this was my entry price. We come down, we test the spring, and then we continue up. And where do we react off of? Well, here is our imbalance right here, buy to sell, react off of that nicely. But then we ultimately continued up because we had a higher time frame or a larger schematic playing out, which really gave us that momentum to get that push to the upside that we wanted to see. And like I said, the schematic that I took here, I really tried to take it up into this imbalance. That's why I highlighted this at the beginning of the video and, told you guys this is where I wanted price to go. It made sense to me. Filling that imbalance and then heading down was the most logical thing to do. That's not what price actually did. It came up and then it slowed down a little bit and ultimately shorted off to make a new low on the higher time frames. So though that is the case, I still caught another buying, or I had another buying opportunity on this pair. So here, this was our higher time frame schematic. So we came down and then we had this movement here. If you look, this is just a sell to buy. This whole downward kind of consolidative movement was a sell to buy. And then here we had another sell to buy. So my two areas of interest were down here and right here, 50% of this. So when we get to the 50% of this selling volume before the buying up, what do? Well, we come into it, we start to slow down in price, and then we accumulate. And this is actually very clear on the 1 minute chart. So if I go to the 1 minute chart, let me adjust this. So if I go to the 1 minute chart, what do we have? We have price coming strongly into our level. And what do? We have preliminary support, we have a selling climax, we have a secondary test, we have a secondary test in B, and then we have our spring, right? Exactly at the level I have marked off here, my point of interest. So we accumulate, and then here we broke this structure, tested this, so this is the test of the spring, and then I entered on the test of the spring. So we came in again to my higher time frame point of interest. We accumulated, we broke structure, we tested that region, and then we broke above. So I entered simply on the test of the movement that mitigated the spring, and then I took it into this little buy to sell. This is one of the only up close candles that is in this selling volume here. So it was a logical place to take profit. And it was a really quick 1 to 5 essentially. And if you had caught this, sadly, I wasn't by my computer. If you had caught this mitigation here, it was about a 1 to 8. So those are the two breakdowns I have on gold. I took these trades. This one obviously occurred, the one way over here occurred much earlier, or much further back in time than this one, but the ideas are the same in each one. I mean, timing is important within schematics, but the more important aspect is being at a higher time frame point of interest, or just a point of interest in general. Like in this instance, we came into a spring on a higher time frame schematic, so that was a point of interest for me. That higher time frame spring gave us the momentum to get this extended move, but the refinement that I did here with this schematic allowed us to really get a high risk to reward trade, because we had the force of the larger time frames pushing us in the positive direction, but we also had the precision of the lower time frames telling us that instead of putting a stop down here, we could put a stop right here, which will increase your risk to reward significantly. So now that we are done with gold, I'm going to move on to USDCAD. So looking at this level, we had, sorry for that creaking, that's my chair. So we had a 4-hour sell to buy here that had an area of imbalance as well. So that was a point of interest for me. And I was looking at it not to get a huge reaction, but I was expecting price to rebound from it. And I was specifically looking for a schematic on the lower time frames. So price reacted very strongly off this level. I truly didn't anticipate a movement like this from here up. You know, it just, with the enduring downtrend that we had, I didn't think that we would push like this, which is quite sad, as you guys will see in just a minute. As soon as we got to this level, what do we do? Or what did we do? Well, we accumulated in price, right? We had our preliminary support, price starts to slow down. We had a selling climax, we had a secondary test, we had a secondary test in B, and then we had a spring that we tested the open of this candle on. This is really where the selling volume was injected, and then we bought up, broke structure, and then we tested right here, right? So my take profit was right at 1.2552, really 1.255 would have been fine, but we had a buy to sell here. We had this buy to sell. So, and then this buy to sell, this higher time frame buy to sell. So this was really an area that made a lot of sense to take profit at. Sadly, if I had held on to a large portion of my position, I would be up about a 1 to 31. So look at the stop loss that you could have had on this trade compared to how, you know, how much it's moved. It is now taken out this high. It took out this high, this high, this high, this high, this high, all these highs. It has taken out all that liquidity because we came into a higher time frame point of interest, specifically the 4-hour sell to buy that had an area of imbalance. And then we, I mean, literally perfectly accumulated. This is exactly what we want to see. We want to see price come into our level, slow down, form a schematic. This is again, a beautiful schematic that, regardless of how you label it, the concepts are there. This is just liquidity, 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 liquidity. Last move to sweep it, break of structure, and then we continue long. The mitigation on this was to the T, and we have been moving up ever since. Yes, we've gotten, you know, our pullbacks, but ultimately this has just been a straight move ever since we mitigated this spring, because that spring took the orders here, it took all the liquidity here. Anybody trying to buy here, if someone was watching the 3-minute time frame, this is support. They got stopped out of their trade. What do? As in the banks, what did the banks do? They break structure, they mitigate, and continue in the direction that price was intended to go in. So even though this is up a 1 to 30, I caught about a 1 to 9 on it. Still really great trade. It didn't take much time at all for it to take profit, which is always a beautiful thing. And this is just, again, like gold, another perfect trade where everything lines up. You're in a higher time frame point of interest, and then you get the schematic you're looking for. The labeling schemes aren't important because we're going to be going over that more in our course, and you'll learn how to truly identify the selling climax and figure out where that should be relative to the other extremas of the schematics that we look at. So that is my breakdown on those two trades. I think that these are really perfect examples of what to look for. They capture everything. They're very clear, and they have confluence in all areas. Higher time frame points of interest again, and then getting that liquidity that we really want to see when we come into those points of interest. That is a huge catalyst to getting these movements. So I hope you guys enjoyed. If you have any questions, please don't hesitate to message us on Telegram. Our course will be dropping very soon. We're very excited. We think that it'll help you guys understand schematics and the way we trade them. I just gave a brief overview in this video, nothing, too specific, because that is reserved for members of the course. But I think this is very valuable, and, learning these schematics can be difficult, but I wanted to clear up what a good example can be like. So at the very least, if you see something that looks like one of these, you can be pretty confident that it will be a solid trade. So that's it for tonight. I, again, hope you guys enjoyed. Message us if you have questions. We're always here to help. And as always, thank you.